Crypto has been getting absolutely decimated since the beginning of 2022. We see major cryptocurrencies like Bitcoin and Ethereum lose 70% of their value from their all-time highs. And many people are watching the space wondering like, hey, can we actually see any recovery, and can we actually start to see these cryptocurrencies make an upward trend to ultimately break new all-time highs? And in this video, I want to talk about a path forward where major cryptocurrency like Ethereum can actually start doing this and make a brand new all-time high of $5,000 and beyond, and how it can do this relatively soon on the grand scheme of things. I'm going to talk about all this as a blockchain developer who works the Ethereum technology on a daily basis. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to know how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. All right, so let's get into this. Let's talk about how Ethereum could reach $5,000 per coin and beyond relatively soon in the grand scheme of things. So I want to break down the views today from a top analyst in the space, Arthur Hayes, who is the co-founder of BitMEX Exchange, who breaks down this analysis from a perspective of two major events that could happen really soon in the entire crypto space. So number one is the Ethereum Merge, where Ethereum is going to transition to proof of stake. That's going to happen in just a few short weeks. Okay, and then also a Fed pivot, and how pretty soon we could see ETH actually break $5,000 per coin and beyond based upon the outcome of these two events. So before I get into this, of course, none of this is supposed to be treated as financial advice, and I'm not personally telling you to buy or sell any cryptocurrency based on this information. But let's take a look. Okay, so let's start off with the Merge. And just clarify, what is it if you're not totally familiar? So this is one of the most highly anticipated updates in the entire crypto space, really since Ethereum was created. So this is Ethereum's transition from proof of work to proof of stake, where Ethereum's no longer going to have miners, it's going to have validators. And instead of mining cryptocurrency in the blockchain, you can be able to stake it and actually earn passive income for doing that to help secure the network. And what's so significant about the Merge as it relates to, the actual value of Ether, the cryptocurrency itself, is that there's so many aspects of the Merge that can impact the price. So let's talk about those. So number one is definitely the Merge trade. So people trying to accumulate Ether ahead of the Merge is sort of like, buy the rumor, sell the fact situation, or even just accumulate Ether ahead of the Merge for the reasons that I'm about to talk about now, which are the fundamental changes to Ether, the asset itself, that are going to happen after the Merge, which in my opinion, will likely increase the demand for Ether, the asset itself. So let's talk about some of those fundamental changes. So number one is that, Ethereum is going to become proof of stake. So you can be able to stake it and earn a passive income reward natively with Ether, the asset itself. And that's going to generate attractive yields. So you're talking, minimum 4% on your Ether, but maybe even scenarios from about, 6, 8, even 10% with other factors like transaction fees, ME boost, et cetera, at times of peak network activity. Okay. So, this is going to be attractive for lots of big players in this space who want to run validators and earn, passive income on a blue chip asset like Ethereum that they also expect to appreciate in price over time. Okay, so that's number one. Is a new feature of Ethereum is going to cause, more demand. So what about the supply side of Ethereum? Because price is always a function of supply and demand. You got to have reasons you want to hold it in the first place. And then also, if there's no sound supply behind it, then it doesn't really matter at all. Well, there's some big changes coming down the pike for ETH becoming a deflationary asset. Okay, so we're going to be burning more ETH than is created by the blockchain, assuming the network activity stays the same after the Merge. That's what's known as Ethereum's triple halving, where the amount of Ether hitting the blockchain on a day-to-day basis gets cut in half 3 times. So that's really what the Merge is and why people are watching out for it, okay, among other things. So the other big thing that Arthur talks about, another big thing to watch out for is the Fed pivot. So, okay, what is that? So basically, we've seen, one of the big reasons that crypto has been absolutely decimated since the beginning of the year. It looks a lot like the stock market, okay, and this big downtrend. Well, that's because they're both affected by the same thing, which is the central bank of the United States and changing monetary policy from expansion to one of tightening to try to curb inflation, okay? And that's had a huge, impact on pretty much all assets because of interest rates, all right? We've raised interest rates, raised the federal funds rate. That's had an effect on other interest rates, and it's slowed growth and caused lots of asset prices to, reprice and ultimately trend downward all year. So the idea of Fed pivot is essentially Fed saying, okay, we're going to reverse course again to one of expansion, because at some point, essentially everybody's expecting them to do this because, our economy really thrives upon an expansionary policy. And many people think this is a question of just if, not when. And so these are two big events that Arthur is watching out for. So the ETH Merge, which is probably going to happen within the next few weeks, at the time of recording this video, assuming that nothing goes wrong between now and then. and also this Fed pivot that everyone's watching out for, which he's, thinking could be within a 6 to 7 month timeline, of Q1, Q2 of 2023 at the time I record this video. And now both of these things and their outcomes could affect the price of Ether. So let's kind of look at that. So he breaks this down into 4 different scenarios. So scenario 1 being like the Fed pivot within the next several months, plus a successful Ethereum merge, like whether the Ethereum merge works or not. And that's essentially what he argues in favor for, is that we're likely going to see a Fed pivot in the Ethereum merge, how that could affect the price. But also some alternatives to consider, like if there's no Fed pivot plus a successful Ethereum merge, if there's no Fed pivot plus an unsuccessful Ethereum merge, and also a Fed pivot plus an unsuccessful Ethereum merge. All right, so let's go through some of those. So the first one is the case that he argues for, which is a Fed pivot plus a successful Ethereum merge, okay? And the best case scenario for this. So basically what he says here is that, back in November of 2021, this was an environment where the Fed was printing money and the tension was shifting, towards the upcoming Ethereum merge when things were really frothy in the space. And that's when Ethereum peaked around $4,800, close to $5,000, okay? And so he's saying for that reason that he's using this psychological barrier of $5,000 per Ether as the base case price target for the situation. So if the Ethereum merge is successful and we have a Fed pivot before, Q2 of 2023, then we could likely see ETH hit $5,000 per coin. But he also says this is a conservative estimate. You see the real explosive movement in price after the fact. And how a similar thing could happen to Ether here. And that's going to have a way bigger impact because we're talking about a triple halving, okay? So you can visualize this on the screen here. So basically, this is the blockchain itself, and these are the validators who are staking ETH on the network. So you have to understand, anytime you create a transaction on the network, you pay a fee to do that. Part of that fee goes to the miners right now, it'll go to the validators later. But there's also new ETH created by the blockchain to incentivize them to run the computers on the network, okay? And so right now, that is about a 4% annual issuance, okay? So basically 4% of the ETH supply, roughly speaking, gets added to the circulating supply. But after the after the merge, that's going to go down. It's going to cut in half 3 times, from 4% down to 2%, 2% to 1%, 1% down to 0.5%, hence the triple halving, okay? So this is a massive reduction. I mean, way less ETH is going to hit the market, but we also have this fee burning mechanism in place. So whenever you're, paying those transaction fees, part of that fee gets burnt and just erased from the network, okay? And there's a very high probability that on a larger time frame, assuming the network activity just stays the same over time or continues to increase, that ETH will actually become deflationary and there'll be less ETH on the market every single year, because what can happen is the actual amount of ETH burned can outweigh the amount of ETH created by the blockchain. You can see that simulated on a website like ultrasound.money. If you go to you look at all the ETH, you can see 5.5 million issued per year, 2.5 million burnt. But if you simulate the merge, that would mean only 0.6% issued and 2.5 million burnt, which would be minus 1.6% inflationary or 1.6% deflationary negative issuance on an annual basis. And that's the structural change to this demand-supply dynamic that he's talking about here. That combined with the Fed pivot of essentially having more money flowing through the economy and people being generally more risk on, that could easily push Ethereum back to $5,000 and beyond. So a couple more scenarios here. No Fed pivot plus a successful Ethereum merge. So if the merge in and of itself just works out, but we actually don't see any type of change in the monetary policy, he's saying that basically, how does he arrive at a price target on this? Well, basically during the rough periods of these big liquidations we saw earlier this year, the ETH increased by about 30% in a matter of weeks. And then from the July 27th Fed meeting, it went up 25% in absolute terms and 9% versus Bitcoin. And if Ether were to do a similar type of thing again, and then you add in the impact of the triple halving, which I was just talking about a second ago, then we could still see ETH arrive at a price of $3,562. All right, so then scenario number 3 of no Fed pivot and an unsuccessful Ethereum merge. So this is like sort of the worst case scenario that nobody wants. So what he's saying is that, there's no free money and no assistance from Archangel Vitalik. So basically it takes us back to the dark ages. That would put us back at the recent low of about $1,000 per Ether, which is his price target for that scenario. And then finally, a Fed pivot, but an unsuccessful Ethereum merge. So basically he's saying if the merge is unsuccessful or is postponed and we see the Fed actually reverse course and change its monetary policy, then we could arrive to an ETH price conservative that could be back to around $1,600 after ETH rallies off the lows, which we probably see some type of correction if the Ethereum merge is unsuccessful. And so you can see a summary of all these scenarios out here with a 25% probability assigned to each of them of a successful merge plus Fed pivot of $5,000 per coin The next area of 3,562, 1,099, and then 1,600 with a total expected value of $2,815 per coin. And so that's an overview of how Ethereum could break $5,000 per coin soon based on the outcome of the Ethereum Merge in a few short weeks and the possibility of the central bank of the United States reversing its monetary policy within, the next several months or so before about Q2 of 2023. And also some alternatives on where ETH price could be, assuming that one or each of these things does not happen. All right, so that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You can find those free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you how to master blockchain step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp University.